Hello everyone. Welcome back to Accountants Minds. I hope you're doing well. In our previous lessons, we learned about the double entry system, the accounting equation, the types of accounts, and the rules of debit and credit. Today, we are going to learn one of the most important topics in accounting: journal entries. Don't worry if you're a beginner. By the end of this lesson, you'll understand how to record business transactions correctly using simple steps and practical examples. So, let's get started. First, let's understand. What is a journal entry? A journal entry is the first formal record of a business transaction in the accounting system. Think of it like writing important events in a diary. Before information is stored permanently, we first write it down. In accounting, every business transaction is first recorded in the journal. After that, it is transferred to the ledger. This is why the journal is called the Book of Original Entry. Another important point is that transactions are recorded in chronological order, which means they are recorded according to the date they happen. Also remember, every journal entry must have at least one debit and one credit. And the total debit amount must always equal the total credit amount. Keep these 4 points in your mind because they are the foundation of journal entries. Now let's look at the format of a journal entry. Every journal entry has 5 main parts. First, the date, which tells us when the transaction happened. Second, the particulars, where we write the account names. The account being debited is written first. The credited account is written below it. Third, we enter the debit amount. Fourth, we enter the credit amount. Finally, we write a short explanation called the narration. For example, being capital introduced into the business. Narration helps anyone reading the accounts understand the reason for the transaction. Now you may be wondering, how do we record a journal entry? It's actually very simple. Just follow these 5 steps. Step 1. Read the transaction carefully. Step 2. Identify all the affected accounts. Step 3. Determine the type of each account. Is it an asset, liability, owner's equity, revenue, or expense? Step 4. Apply the debit and credit rules. Step 5. Record the journal entry. If you always follow these 5 steps, you'll be able to solve journal entries correctly. Let's practice with some simple examples. Example 1. The owner starts the business with 100,000 rupees in cash. Which accounts are affected? Cash and capital. Cash is an asset. Assets increase with debit. Therefore, debit cash. Capital is owner's equity. Owner's equity increases with credit. Therefore, credit capital. Now let's look at another example. The business purchases furniture for 20,000 rupees in cash. Furniture is an asset. It increases. So, debit furniture. Cash is also an asset. But cash decreases because we paid cash. Therefore, credit cash. One more example. The business purchases goods on credit for 50,000 rupees. Inventory increases. Inventory is an asset. So, debit inventory. Accounts payable increases. Accounts payable is a liability. So, credit accounts payable. Notice that in every example, the total debit equals the total credit. Let's look at some common mistakes. Many beginners record only one account. Some students choose the wrong debit or credit. Others forget to write the narration. Another common mistake is having unequal debit and credit amounts. To avoid these mistakes, always remember this simple method. Read the transaction. Identify the accounts. Determine the account type. Apply the rules. Record the entry. Finally, check that the total debit equals the total credit. Let's quickly summarize today's lesson. Today, we learned what a journal entry is. We understood the format of a journal entry. We learned the 5 simple steps to record business transactions. We also practiced several practical examples. Finally, we discussed the common mistakes and how to avoid them. Remember, every business transaction begins with a journal entry. And every journal entry must have equal debit and credit amounts. Thank you so much for watching today's lesson. If you found this video helpful, please like, share, and subscribe to Accountants Minds. In our next lesson, we'll learn ledger accounts, also known as T accounts, and understand what happens after recording journal entries. Thank you once again. keep learning, keep growing, and I'll see you in the next lesson.